John.
You ready? Everybody ready? Good afternoon. Let's open the city council meeting up Tuesday, June the 16th, 2020. Would you stand with me so the mayor can do our invocation and pledge?
Please follow me. Lord, thank you once again for the city that we live in. We appreciate all you have given us and provide for us. The weather's been beautiful. We've got the rain, the grass is green, the humidity's down a little bit. We ask that you also watch over all of our citizens and everyone in our country and pull together to get through some of these crises that have been created. We ask that you watch over everyone. We do what we do for you and all we do in your name. Amen.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Kathy, we call a roll, please.
Mayor Shute.
Here.
Detman. Ivy.
Here.
Lawrence.
Here.
Stewart.
Here.
Carlisle.
Here. Okay, if there's anyone in the audience that has any business, if you see Clerk Haley, she will get you on the agenda. Mayor's report.
Nothing really to report still. Town is opening back up, which is nice to see. Restaurants are being populated for this time of year. They've had some pretty good response so far, so which is a good thing to watch, see the people going out and supporting our local businesses, and it's much appreciated. We need to continue to do that, but other than that, not a whole heck of a lot. United Way is doing another food drop at Bountiful Blessings on Saturday. They bring in a semi and distribute food, no questions asked. So that's good. So other than that,
Okay, thank you.
we're here.
Councilman's concerns, comments, and liaison reports. Nothing? Mr. Stewart?
No, sir.
Mr. Ivy?
Nothing.
Nothing here either. Okay. We have a consent agenda. Need a motion?
Make a motion to approve the consent agenda as presented.
Second.
Kathy, we have a motion and a second. Is there anyone in the audience wants to talk about it? No comments up here? Poll the board. Please.
Ivy.
Yes.
Lawrence.
Yes.
Stewart.
Yes.
Carlisle.
Yes. Okay, there's no old business, so we're going right to the new business, and I know everybody's excited about this. The audit financial statement. Mr. Davis and Ms. Robinson, will you please make this short and sweet?
That will be my topmost goal. Good evening. The first thing I'd like to do is just review the letter that was provided with your financial statements. This is information that under our professional standards we're required to communicate to the board, those charged with governance. On the first page, discussing accounting policies, there's been no new accounting policies, and the application of existing policies has not changed from 2018 to 2019. There are accounting estimates in these financial statements. Depreciation, we use estimated lives, and we allocate the cost of assets that have been capitalized and depreciated. Those lives range from 5 years with equipment and vehicles up to as long as 40 years for your infrastructure type assets. Next page, our unpaid health claims liability. There's a small amount of estimation in there that's included in addition to actual claims that take place from October through February that relate back to the previous year. And the other two large items of estimates deal with actuarial calculated liability amounts, dealing with your other post-employment benefits for healthcare costs for retirees that are allowed to continue on your health insurance policy, and the others dealing with net pension liability calculations for the pension plans that you participate in, which are the FRS, which is done by a state actuary, and then your local actuary for the fire and police pension plans. We didn't encounter any difficulties in performing the audit. Corrected and uncorrected misstatements. There are no uncorrected misstatements, and there was an immaterial adjustment related to FEMA revenue that we reported. We had no disagreements with management. Management has provided us with a representation letter that's dated June 15th. Consultation with other independent accountants. As far as we're aware, there are no second opinions that were obtained regarding application of accounting principles. And then there were no items discussed related to the retention of us as auditors for this particular audit. And then there's RSI information in this financial statement that's in the back of the document, and we agreed that information to our financial information, but we are not rendering an opinion on that information. So the next thing I'd want to do is just review with you on kind of a high note and maybe point out a couple things, one thing that's in the statements, and then review the PowerPoint. Arrow key. Do I just need to click down here? All right. So here's a summary of the document that you have. The pages 1 and 2 are our independent auditors report, and we are giving an unmodified opinion, which that means that your financial statements are accurately reflected in your financial statements. Whenever we do an audit, we have materiality standards that we assess, so we're given a high level assurance on the financial statements, but it's not absolute. The numbers are not equal to 100% guarantee as to what they're showing. Pages 3 and 14 are the management's discussion and analysis. That's prepared by management, and it's discussing the changes from 2018 to 2019. The government-wide statements, they're broken up into two types. We have governmental activities, which includes all your governmental funds and the internal service funds. And then we have our business type activities, which includes your water, wastewater operation, your golf course, and your solid waste operations. The fiduciary funds are not included in the government-wide statements. The fund statements are from pages 18 to 29, and you have your governmental funds, which are on a near-term resource, which is showing you what your available resources are for your general fund and your other governmental funds, which includes your infrastructure fund and your CBG fund. So it does not have long-term debt, doesn't have capital assets, and other types of long-term items like your net pension liability that are reflected in the government-wide statements. The next section deals with notes to the financial statements, and I guess one item I just want to highlight on page 49 is your debt service maturity schedule for your business enterprise funds. The middle of the page is the capital lease obligation that we have in the water fund for meters. So we have a 2020 debt service amount in 2021, and at that point, that obligation will be satisfied. If we look at the bottom of the page and look at what our principal and interest payments are, you can see that for the next 4 years, between 2020 to 2023, it's approximately $2.3 million. And then after that point in time, in 2024, it drops down to about $100,000 per year. So in the fiscal year 2023, your long-term refunding note will be fully paid off at that point. And the remaining debt extends out for another 10 years, approximately $100,000 per year for the debts that are on page 48. That's approximately $944,000. The next section is pages 77 to 87, is the required supplementary information. And that's dealing with the pension plans and the other post-employment benefit liability related to the health insurance. And then in pages 88 through 90, is the combining statement for your internal service funds. So that includes your health insurance fund and your risk management fund. And then on page 91, 92, we have our report on internal control and compliance. We have no findings to report in our internal control or compliance report over internal control or compliance. And then page 93 is our schedule of findings and responses. We do have a finding management letter comment that we're reporting on regarding a purchasing issue that happened with the CRA and the Circle project that was undertaken during the year. And then our management letter is pages 94 to 96, and then our independent auditor's report on your compliance with Florida statutes and the investment of public funds is on page 97. So, as part of the rules of the Auditor General, we're supposed to do a financial assessment of a governmental entity and determine on whether they have deteriorating financial condition. And I'm happy to report that the city is not in that situation. You have a very favorable overall financial condition assessment. And when we go through the next few slides, it'll show you that you have adequate reserves and your expenses and revenues are fairly consistent. The first deals with the general fund. So this is looking at what your unassigned fund balance is in relation to what your next year's budgeted expenses are. The GFOA recommends 2 months or 16.7% of what you should have as a minimum. Your fund balance policy is 25%. So in looking at it from fiscal year 18 to 19, you can see that your unassigned fund balance did decrease 1.3 million. So your percent of expenditures for next year's budget did decline 13%, but 50.5% is a half a year of unassigned fund balance for your next year's budget, and that is a very healthy reserve to have on hand. The next slide deals with taking your working capital calculation for your business activities, water, wastewater fund, and comparing it to what your next year's budgeted expenses are, which include capital outlay as well as normal operating expenses and the next year's debt service expenses. So you can see that the working capital calculation at the end of 2019 increased about 1.5 million. It was 897 and it increased to 2.4 million. The amount of next year's budgeted expenses did decrease compared to the previous year of about 1.5 million. So your percent of expenses was at 21.39%. So slightly below what the GFOA recommends, but a substantial increase of about 14% compared to the previous year. Same calculation for the solid waste fund. The overall working capital increased about 73,000. The next year's budgeted expense amount did increase quite a bit, 626, and that's because capital outlay is in this number, and there's a couple large purchases for new equipment that are in the 2020 budget. But you're still well above what the 25% threshold is, so it did decrease from 94% down to 73%, but still you have 3/4 of a year of working capital to pay for a next year's budgeted expenses. So this slide right here just is looking at the 5-year trend for what the unassigned fund balance trend was from 2015 to 2019. So the highest point was 2015, which was about 7.4 million. It slightly decreased in 16, but increased in 17. In 18, it decreased 277,000. It was at 7,066,000. And then 2019, it decreased 1.3 million to 5.7 million. But still, you have over a half a year in your fund balance. Part of the reason for the decline is that during the year, you did purchase, or you did put up a deposit for a fire truck of about 573,000. But because you didn't take delivery of that truck in 2019, it's actually sitting as an asset on your general fund. But even though it's sitting as an asset, it affected what your unassigned fund balance is. And in the next slide, I'll kind of show you how that maybe comes together. So in 2019, this is a slide that compares our revenues and other financing sources to our expenditures and other financing uses. The difference between total inflows and total outflows is 706,000. So the connection between why this decrease hit 1.3 million is because you had an outflow of resources that's not showing up in these numbers. That's 556,000 for the fire truck deposit. So if we include that, we're pretty close to the 1.3 million decrease. But in looking at what our trend is, in each of the years, our revenues are less than the expenses. The closest was in 2017. We were at 15,676 negative from total resources. In 2018 to 2019, our revenues did decrease 843,000, and then from an expenditure standpoint, they decreased quite a bit, 2.1 million. The main driving force between why we had such a big decrease from 18 to 19 on expenditures is because this is almost on a cash basis, so our principal debt service payment on Harder Hall is included in the 2018 numbers, and that was approximately $2.5 million. So if we strip that out, we did have a couple increases in expenses that kind of offset that decrease. Law enforcement increased about 129,000 compared from 18 to 19, and the fire department increased about 196. The law enforcement is primarily attributable to an increase in pension contributions, about 111. In the fire department, our salary and wages increased about 111,000. 25,000 of that was in overtime, and our FRS contributions increased about 35,000. The fire pension contribution was fairly consistent with the previous year. One of the last slides will go into that. So from a revenue perspective, it decreased 843. The sources of our decreases were in our transfers in. We had less transfers in come into the general fund, about 948,000. And insurance proceeds, we had a lot of collections of money come in 2018 related to hurricane damage. This year we didn't have any, so we had about a $451,000 decrease there. But those two significant decreases were offset by increases that we had in ad valorem taxes of about 66,000. Our fire assessment revenue went up about 94. Federal and state grant revenues went up 213,000. The large component of that was FEMA grant revenue that came in that was recognized as revenue, about 197. Local government grant revenue went up 151,000. We had additional funds for a school resource officer of about 65, and funding from the county for Max Long Field was an increase of about 80,000. So in addition to that, we had interest income increase about 82. So this is looking at not working capital, but so we don't include receivables and other current assets in here, but this is just looking at what our unrestricted cash is, less what our current liabilities, which does include next year's debt service. So you can see in 2018, from 15 to 18, we had a decreasing trend. So in 2019, it reversed up, so it increased 1.2 million. Overall, cash that we had on hand in 18 unrestricted was about 3.3 million in the water fund, and in 2019, it was 4.4 million. So our overall cash position in the water fund did increase 1.1 million. So this is looking at what revenues from operations for the water wastewater fund compared to operating expenses and interest expense. How well are we covering our interest expense and debt service? I mean, in all the years, we are positive. The biggest differential year that we had was in 17, where our revenues exceeded the expenses by about 2,066,000. Our lowest was in 2018, which was 1.4 million. But in 2019, it was 1.8. So we had an improvement of 472,000 increase in our income differential between operating revenues and expenses and interest expense. Our operating revenues increased 438,000 from the previous year, and that's mainly attributable to the rate increase that we did of 5% in our water and wastewater rates. And then our expenses actually decreased 35,000 in comparison to the previous year. This slide is just looking at the component of what our operating revenues are, wastewater in one color, water in the other. Overall, from 15 to 19, our operating revenues for water were 5.4 million. In 19, they're 6.3. In wastewater, it's 2.7 million, and in this year, it's 3.2 million. In comparison to the previous year, the increase in our water revenues were 308,000, and in our wastewater revenues, they were 159,000. So breakdown between the mix over this period of time, wastewater at the highest was 67%. In the current year, it's 65.8, and in 15 for wastewater was 33, and now it's 34.2%. Solid waste, not looking at working capital, but looking at unrestricted cash less current liabilities. It was fairly flat from 2015 to 17. In 18, it increased 186,000. In 19, it increased 94,000. The cash on hand, unrestricted, at the end of 19 is 1.8 million. So you have more than enough cash on hand to finance your equipment purchases that you're doing in 2020 by not having to use any debt to pay for those purchases. This slide is looking at, similar to the water wastewater, revenues compared to expenses. So in 2019, we actually had a reversal. Our expenses were actually higher than what our revenues were. The deficit of revenues compared to expenses was 84,000, so it's pretty close to break even. Last year it was 39,000. So the expenses do include depreciation, which is a non-cash expense. So the revenues from 18 to 19 increased about 28,000, and then our expenses increased 151,000 compared to the previous year. So expenses have increased from 17 to 18, 145, and like I said, from 18 to 19, 151. The big driving factors there, the 18 increase was employee compensation and other benefit costs, about 26. Maintenance expenses of about 139 in 2018. In 2019, maintenance was higher by 38,000, and employee compensation increased about 106,000. The next slide is looking at the golf course, and in this 5-year trend, the revenues are not covering expenses. We don't have the transfer in here. This is just looking at what the revenues from operations compared to expenses are. and this does include depreciation as well in the expense side. The smallest or narrowest margin was in 15, which was about $184,000 deficit, and the largest is in 16 and 19, and they're right at a deficit of $290,000. Our revenues did increase from 18 to 19, 22,000, but our expenses did increase as well, 69,000. And then the largest driving factor of expense increase in 19 was salary and wage expense of about $51,000 increase. In 18, the expenses only increased $5,600. One thing from a revenue or from a liquidity perspective that we did have a large insurance gain that doesn't reflect here in 2018 of about $452,000 for hurricane insurance proceeds from the hurricane, and most of, or if not all, that money was utilized during 2019 to construct new cart barns and other assets in 2019. So the next group of slides is looking at, on a full accrual basis, the governmental total expenses for business activities and for governmental activities. So from 2015 to 16, expenses were fairly consistent, which includes depreciation government-wide. They were about $18.9 million and $19.4 million. And then from 2017, 18, and 19, they have increased. They were $22 million in 17, $23 million in 18, $23.5 million in 19. Of that amount in 19, $3.8 million of it is depreciation, and so other non-depreciation expenses were $19.65 million, and so that was an increase of about $450,000 citywide for non-depreciation related expenses when we go from 2018 to 2019. And so that was about a 2.3% increase. So the next 4 slides I'm going to go through is the same sort of trend, but each of these slides, or the total of these slides, is going to account for 60% of that $19.6 million expense. That way, you have no idea as to what the source of the $450,000 increase is. So this is looking at salary and wage expense. So this is kind of, on the left, the scale is, we've zoomed in on it, so if it was it wouldn't look as big of an increase if it wasn't so zoomed in. But salary and wage expense increased to $6.9 million from the previous year, so it was an increase of $227,000. In 18, from 17 to 18, it did not increase very much. It was only a $14,000 increase, or a 0.2%. So the increase from 18 to 19 was a 3.4% increase. So salary wage expense in 2019 accounts for about 35.4% of total citywide expenses. The highest point was in 2016. It accounted for 39% of what total city expenses were. So this next slide is dealing with what our cash flow contributions are to our pension plans. So you can see from 15 to 16 we had a decline, and from 16 to 19 the trend has been back up. The total pension contributions that were made in 19 were $1.8 million, and that's a 9.6% increase from the previous year. The change by each one, FRS contributions went up $87,000. The police pension contribution went up $111,000, and the fire contribution only went up $6,100. I mean, in total, the FRS is $775,000. Police pension contributions are $486,000, and then the fire contribution is $626,000. Health insurance expense, similar type of trend where we decreased from 15 to 16. And from 16 to 19, we've had an increase. A considerable increase from 17 to 18. That was about a $635,000 increase. And then it's remained at that level in 19. We actually had a small increase of about 110,000. And this particular amount represents about 11% of what the total city budget is. The lowest was in 17, which was 7.7%. And so, yeah, the percent for the contributions was 9.6%. That was not what the increase was, I'm sorry. The overall, the total, the increase in contribution amounts by category, FRS went up 12.7, the police pension went up 29%, and then the fire pension only increased 1%. But contributions accounts for 9.6%, and then the city health insurance accounts for 11% of the citywide expense. The last slide is looking at what our insurance expenses broken out between workers' comp and property and liability. The total expense in 19 was $788,000, so that's a total increase of $55,000 from the previous year. We had a $38,000 increase in liability and property, and then a $17,000 increase in our workman's comp. And then for 2019, this expense represents 4% citywide. The lowest it was in 17-18. At that point, it was both 3.8%. So this were the high points.
I have a question for you real quick. The total employee cost would be the 35% of the salary and wages plus the retirement contribution plus the health insurance expense plus workman's comp. Would that be correct?
Pension contribution, workman's comp, and health insurance are not included in that number. That is pure salary and wages paid to employees.
Right, yeah. So those other ones would
Are
be
not
part
included in that.
of the overall
Okay, yes,
expense
I
of
think-
the employees, though.
I think I see what you're saying.
Yes.
Whenever you look at direct compensation and other overhead items related to salary and wages,
Right.
a big chunk of that is the 60%.
Yes, okay, thank you.
I was missing your point.
Yeah, no,
Apologies.
you got it. Thank you.
Any other questions? I know it's a lot to digest. I
Well,
think
the hard part is that, this current year is not indicated, and we're not exactly sure where the trends have gone.
Yeah, I think in the audit committee meeting, we did discuss.
Yeah, well, I mean, we've talked about it, but
Yeah.
it almost isn't real because we don't know on your paperwork.
That's right.
So, it certainly looks like our expenses are going up on a regular basis. And, we need to be careful. Is there any trends that you see that alarm you?
I mean, the only trend that probably when we look at what the gap between our general fund revenue sources and what our expenditures are, that's probably, I mean, golf course is pretty insignificant if you ask me. I mean, it's not covering its operating expenses, but, that's not significant as far as I'm concerned in the grand scheme of things. But the revenues in the general fund not covering what your operating and services are that are being provided in the general fund.
Right.
So,
We're spending more than we're bringing in.
and I think that's a conscious effort to keep ad valorem taxes
Mhm.
as minimal as possible. And you do have that, ability that you're nowhere near what you could raise from an ad valorem perspective, and I think that's responsible for the situation you're in for what you have reserve-wise in the general fund. So, But-
That's easy for you to say,
well,
because we'd have to raise it.
I completely understand that. But I guess the point I'm getting to is that you probably shouldn't raise it until you see what your unassigned fund balance decreases are
Yeah,
with
for this
what's gonna be
fiscal year.
happening with our decline in revenues here in the short term.
Yeah, okay.
But you're very well funded from a reserve perspective. Not many governments have a 50% cushion when it comes to what they have in their general fund.
Mhm.
So y'all should probably be very proud of what you've been able to accomplish in that arena.
I'm sure it's less now, though, substantially.
Well, I mean, I'm assuming that, your revenue declines probably started kicking in probably last month, right?
This is the first month that we're seeing.
So this is the first month for June.
June
re-
8th, yes.
state receipts that are
State
coming in.
receipts.
Penny, didn't you say that one of them was like 47% less than normal?
The state revenue sharing for the first month, that distribution, yes, sir.
So that gives you an
I don't know
idea.
that it's a cautious effort.
By the
on
state.
State for their year end, but, and our fund balance does continue to decrease. We do continue, we're not adding to it, we are continuing year after year to take from it. Although it's still healthy and favorable, it's still, we are still using it to, fund the operations of the city.
Let me just run through, I have a little more detail here. In 2019, your general fund revenues were 9.3 million. The sources of that were 3 million from ad valorem taxes. Sales, use, and fuel taxes were 440,000. You should be expecting to see declines there, but it's not a huge number. Utilities and communication service taxes are 1.7 million. The previous year they were 1.8, so you did have a small decrease from 18 to 19. But I'm not sure how many people are gonna turn off their cell phones and those types of things. So I think your revenue source there should be fairly stable. Your fire assessment revenue is 545,000. Franchise fees are 998. They're directly tied to your electric consumption within the city limits. I wouldn't expect you to see much decrease there. License and permits are 242,000. Your state revenue sharing number, though, that's 1,005,000 approximately. So that number was 842 in 15, and so it's increased, close to 150,000 from 2015 up to 2019. Your federal and state grant revenue is 211. That's mainly FEMA money, which you're not going to see. You're going to earn some more additional revenue there that was not recognized in 19, but not that much. Local government revenue did increase from 155 to 306 because of the school resource officer and the max long. So I would anticipate the 110,000 coming from the county still remaining. Charges for services for other miscellaneous charges are 285,000. Investment earnings, fines and forfeitures are 105. That was a small decrease from the previous year from 123. Your investment earnings increased with favorable interest rate environment that went from 185,000 to 267,000, and miscellaneous revenues went from 52 to 82. So your state revenue sharing amount is $1 million of your 9.3. So I wouldn't anticipate it all to go away, but I would anticipate that you should start experiencing some decreases there.
Yeah.
Half of it, 47%, I think.
That's a big
Yeah.
hit.
So that's $500,000.
Yeah, it's $500,000 right there. Okay.
All right. Hopefully I didn't bore you with that.
No.
Any other questions or comments?
No, we just have to figure out how to get more revenue.
Sure. There's a lot of struggling businesses out there that are feeling the same pinch, that's for sure.
Anyone have any more questions?
No, I'm good. Thank you.
You're welcome.
Any of you department heads have any questions? I guess.
Just as a matter of statement, I guess, we do have a couple of things that we are increasing our revenue on already that we voted on. It's going to happen in the next few years. So we set that in place, I guess, last year and the year before. And so we do have a few increases. I think, the solid waste was one of them, and water was another, so we,
Yeah, fire. Yeah.
we are trying to keep up with it in some regards.
Right, yeah. Yep. Okay, I think we're done. Thank you.
All right.
You've done a
Thank you very
great
much.
job. Penny, thank you for your good work. We're blessed to have you. Okay, thank you.
All right, thank you.
Huh? That's 10A. Where am I at? Huh? Yeah. where-
You have to approve the financial audit.
Oh, okay. How come I don't have that? Thank you.
Anytime.
Okay, we need to have a motion to approve the financial audit.
Make a motion, we
Thank you,
approve
John.
financial
Thank you.
audit.
I'll second.
Any questions? Pull the board.
Ivy,
Yes.
Lawrence,
Yes.
Stewart,
Yes.
Carlisle.
Yes. Okay, we're gonna move on to, there's no business from the audience. We'll move on to the city attorney's business. Mr. Swain.
The first item is agenda item 12A, and it's ordinance 1450 to amend the purchasing policy. I'll read the title for you. It's entitled an ordinance amending Division 2 of Article 5 of Chapter 2 of the Code of Ordinances of the City of Sebring to amend and clarify the purchasing policy and procedures of the City of Sebring, providing for bidding only where an item of expense exceeds $50,000, authorizing the creation of purchasing policy and procedures by resolutions, providing for severability, providing for conflict, and providing for an effective date. This ordinance is on your agenda for second final reading if you so incline.
Okay, anybody have any questions or comments? Anyone out in the audience? We need a motion.
Okay, I'll make a motion that we approve the ordinance 1450, amending the city's purchasing policy on second final reading as presented.
I'll second it.
Kathy, we got a motion and a second. Does anyone wanna speak on this? Poll the board.
Ivy,
Yes.
Lawrence.
Yes.
Stewart,
Yes.
Carlisle.
Yes. Okay, we have 12B, Resolution 2020-29, adopting official purchasing policy. That would be Mr. Swain again.
Yes, sir, you all will have, should have received an updated version of the official purchasing policy clarifying some formatting issues, and it is proposed for you to adopt this resolution, which would adopt this as the official purchasing policy for the city of Sebring.
Okay.
It includes all the changes that we discussed at the last meeting.
Anyone have any questions, comments? Anyone from the audience? Need a motion.
And I'll make a motion that we approve resolution 2020 through 2029, adopting the official purchasing policy as presented.
Okay.
Second.
Okay, we have a motion and a second. Any questions or comments? Poll the board, please.
Ivy,
Yes.
Lawrence.
Yes.
Stewart,
Yes.
Carlisle.
Yes. Thank you, Mr. Swain.
Yes, sir.
Okay, item 13, city administrator's business. Resolution 2020-30.
Evening, council. Attached is Resolution 2020-30, implementing the fire assessment with the preliminary rate resolution that's attached. Do you have any questions?
Anyone have any questions, comments?
You hungry? You in a hurry, or would you like me to go through the calendar for the next?
We need a motion.
I'll make a motion that we approve the preliminary assessment resolution 2020 through 30 at the current 19.70% level as presented.
I'll second.
Okay, we have a motion and a second. Is there any comments from the audience? Anyone up here? Nope. Kathy, hold the board.
Ivy,
Yes.
Lawrence.
Yes.
Stewart.
Yes.
Carlisle.
Yes. And this is what we've been looking for, Ms. Haley.
Council, please pay the bills, please.
So moved.
Second.
Okay, any questions on the payment of the bills? We need to poll the board, but I think they're gonna let you pay them.
Ivy,
Yes.
Lawrence.
Yes.
Stewart.
Yes.
Carlisle.
Yes. Is there anything else that we need to discuss? We're done.